So now we're going to talk about how to balance multiple income streams and manage your time effectively to ensure that you're maximising your income but without burning yourself out. When you have multiple income streams, it can be challenging to balance everything and avoid burnout. Firstly, make sure that you're not taking on too much. It's important to be realistic about what you can achieve and not overcommit yourself. Secondly, prioritise your time effectively. Make sure that you're focusing on the income streams that are the most profitable. It makes sense, really, when you think about it. Also, make sure that you're focusing on the ones that bring you the most satisfaction. If you're not enjoying what you're doing, you're less likely to make a success at it. It's important to get enough rest and take breaks to avoid burnout.
Analysis tools. To perform stock analysis, there are several tools available, such as stock screeners and charting software. These tools can help you filter stocks based on your investment criteria and track their performance over time. Right, some tips for beginners. As a beginner investor, it's important to set goals, follow trends, and diversify your portfolio. By setting clear investment goals, you can focus your analysis on the stocks that align with your objectives. Following trends can help you identify potential investment opportunities, while diversifying your portfolio can help you minimise risk. Setting clear investment goals is important as it helps you focus on stocks that align with your objectives. For example, if you're investing for your retirement, your goals may be long-term and focused on stocks with steady growth potential.
Budgeting is an essential aspect of personal finance, and it's a great way to take control of your finances and achieve your financial goals. So to start with, we'll have a definition of budgeting so that we know what we're talking about. Budgeting is simply a process of planning and managing your finances by estimating your income and expenses and making sure that you're spending less than you earn. It's a crucial step in ensuring your financial stability and achieving financial success.
First up, fundamentals. The first step in analysing a stock is understanding its fundamentals. This includes analysing financial metrics such as revenue, earnings per share, and price to earnings ratio. These metrics can give you insight into the company's financial health, growth potential, and valuation. Let's have a look at those financial metrics in a bit more detail. Revenue. Revenue is the total amount of money a company earns from its operations over a specific period of time. This metric is important because it gives insight into how well a company is performing in terms of its sales and its revenue generation. Earnings per share, sometimes called EPS. EPS is a measure of a company's profitability, calculated by dividing the company's net income by the number of outstanding shares. This metric can give investors an idea of how much profit the company is generating per share. Price to earnings ratio, sometimes known as the PE ratio. The PE ratio is a valuation metric that compares a company's current share price to its earnings per share. It's a commonly used metric to evaluate whether a stock is undervalued or overvalued.
Budgeting's got many benefits that can help you achieve financial stability and reach your financial goals. By creating and sticking to a budget, you can avoid overspending, you can get out of debt, you can save for the future and invest in your financial future. Budgeting can also help you increase your income, open up new career opportunities and achieve financial success. Hi there, welcome to my channel Wealth Wisdom Works. My name is Alan and I'm here to help you take control of your finances and grow your wealth. In today's video, we're going to cover the basics of budgeting and creating a budget that works for you. Before we start, I must remind you that I'm not a financial advisor, and this video and any others do not constitute specific financial advice. Always consult a financial advisor for specific advice relating to your individual circumstances. As a chartered banker with over 20 years experience in the banking industry and a personal investor for over 30 years, I've seen my fair share of financial ups and downs. I've lost everything at one point, everything that I'd worked for, but I rebuilt and I'm now in a secure financial position. That's why I'm passionate about helping others achieve financial stability and security, especially those in the UK in their 40s and 50s who are approaching retirement and want to get their finances in order. And that's where I come in. I've covered budgeting and all other aspects of personal finance in my book, the Wealth Wisdom Blueprint, which is available on Amazon. I'll leave a link to it in the description below. So let's recap and wrap things up. First, we discussed what budgeting is and why it is so important. Budgeting helps you to take control of your finances and makes the most of your money. We talked about some common misconceptions about budgeting and the many benefits it offers. Next, we went through the steps of creating a budget, starting with gathering all the information, tracking your spending, categorising your expenses, and creating a budget based on your income and expenses. It's important to review and adjust the budget regularly to ensure it's still working for you. We also talked about some tips for making a budget that works, including being realistic about your spending, prioritise your spending based on your goals and values, being flexible, and finding ways to increase your income and making saving a priority. In today's video, we're going to talk about the importance of having an emergency fund and why it's crucial for your financial stability. Let's face it, life is unpredictable. Emergencies can happen at any time, whether it's an unexpected job loss, a medical emergency, or a home repair. These unexpected expenses can quickly drain your savings and leave you in a financial crisis. That's where having an emergency fund comes in. An emergency fund is a dedicated savings account that you can use to cover unexpected expenses. Having an emergency fund gives you peace of mind, knowing that you're financially prepared to deal with any unexpected event. But how much should you have in your emergency fund? The general rule of thumb is to save 3 to 6 months worth of living expenses. That means if your monthly expenses are £1,500, for example, your emergency fund should have at least £4,500 to £9,000 in it.
Last but not least, don't forget to celebrate your successes. Investment can be a long and sometimes challenging journey, so it's important to take time to celebrate your wins along the way, whether that's hitting a specific investment goal or achieving a certain level of return. Take time to give yourself a pat on the back and keep yourself motivated. Celebrating your successes can help you keep motivated and reinforce the habit of investing. It's important to recognise the progress that you've made and all the hard work that you've put in towards your financial goals. Celebrating those successes can also help you stay positive and resilient during market downturns or difficult times.
Now that you know how much you need to save, it's time to start building your emergency fund. One of the best ways to save money is to create a budget, and we've covered that in a previous video. This will help you see where your money is going and identify areas where you can cut back on expenses. For example, you could reduce the number of times you eat out, cancel any subscriptions that you don't use, or switch to a different phone, cheaper internet provider. Another way to save money is to find ways to earn extra income. This could be taking on a part-time job, selling items that you no longer need, or doing some freelance work. Once you have some money to save, consider opening a high-yield savings account or an individual savings account in ISA. These accounts offer higher interest rates than traditional savings accounts, and that means that your money will grow faster. In summary, calculating and building your emergency fund is an essential step in achieving financial stability. Start by calculating how much you need to save, create a budget and find ways to save money. Explore some options such as a high-yield savings account or ISAs to grow your money.
Last but not least, don't forget to celebrate your successes. Investment can be a long and sometimes challenging journey, so it's important to take time to celebrate your wins along the way, whether that's hitting a specific investment goal or achieving a certain level of return. Take time to give yourself a pat on the back and keep yourself motivated. Celebrating your successes can help you keep motivated and reinforce the habit of investing. It's important to recognise the progress that you've made and all the hard work that you've put in towards your financial goals. Celebrating those successes can also help you stay positive and resilient during market downturns or difficult times.
Now that you know the steps to creating a budget and some tips for making it work for you, let's talk about some common mistakes to avoid. These are all things I've seen people do in my years as a chartered banker, and I want to make sure that you don't fall into the same traps. First up, not tracking your spending. This is a big one, folks. If you don't know where your money's going, how can you create a budget that accurately reflects your spending habits? So make sure you're keeping a close eye on your spending and don't just rely on your memory. Write it down, keep a notebook, add your spending into that. Next, underestimating your expenses. It's all too easy to forget about the monthly subscription that you signed up for, or to underestimate the cost of a big purchase. Make sure you're being honest with yourself about your spending and don't leave anything out. Another mistake to avoid is not adjusting your budget regularly. Life changes and so does our spending habits, so make sure that you're reviewing your budget at least once a month to see if there are any changes that you need to make. And speaking of changes, it's important to make saving a priority. I know, saving can be a bit of a bore, but trust me, you'll thank yourself for it in the long run. So make sure you're setting aside a portion of your income for savings each month. Last but not least, don't be too rigid with your budget. This is your roadmap to financial security. It's not a straitjacket.